Hi, this is Elliot Wave Sage. I want to go do a quick market update. Like always, this is financial advice. Always do what's best for you. So this update will be real quick. So the market, I believe, will make a bigger push lower, and we could see a bounce once we make this final thrust down to 427, 428, maybe as low as 425, and then we should see a relief rally. But I believe that rally will definitely fail in this wave two, and then we'll get the massive downturn. You call it crash wave three. That wave should define the bear market that we're in. Is it a 4-hour bear market? Is it a weekly bear market or the grand super cycle quarterly bear market? That's what will be defined here. We don't know. I don't want to speculate because when this crash wave 3 comes, it could be an 87 style crash and we go all the way down to the 360, 350 area or lower in 1 or 2 trading days. The other is we bounce and we make a marginal low at 412, 410 to finish the 4-hour bear market to new all-time highs. And of course, the other possibility is we break it to go to 400, maybe 390, and then bounce and go sideways for the next 2 or 3 months to the end of the year, and then we push to the final leg lower in the bear market at 325. So my guess is if we get 87 style crash, it's a grand super cycle has ended type situation, and we'll go even lower than where it ends up. So we would come down here, of course we would bounce, and then eventually that bounce would fail as the grand super cycle corrects for years to come in a massive secular bear market. The other, like I said, the other possibility is the 4-hour cycle ends here at 412, 413, and then we go to new highs. And then the other possibility is just the regular bear market that most people think we're in, the weekly bear market, where you just kind of come down to 380, 390, you bounce around until December, and maybe come January, then you get the final sell-off into February, ending by March at the latest. The bear market ends, and that's it. So that's how I look at the market right now. So the best opportunity is to short any significant strength until you get it. I'll be waiting for this two wave to come. If the surprise would be there is no bounce, we just straight down, that would obviously be more of a grand super cycle crash scenario. And if that starts to happen, just bring your popcorn. Hopefully you're out of the market already. You have shorts if you do, and you make money. And the downside risk, can be unthinkable that people don't understand as the market unravels all the leverage it's built up. So we just don't know how this will play out. So there's really no good setup in the indices right now. It's really just guessing and gambling. If you have to trade it Monday, what am I going to do? You're really just might as well flip your coin or go to the roulette wheel and play some money. The time to short it was up here. If we get this two wave, then it'll be another great opportunity to get another position on the short side. So that's how we play this market. That's the SPY. The Dow's in the same situation. Should get this two wave, and then this is the crash area. This is the 1987 analog. As the longer we hang out here, the more dangerous the market is for a complete collapse. But we'll wait and see what happens. The triple Qs, again, looking for that wave two at any moment, and it could be another good opportunity to short if we get it. And if we don't get it, then we should be heading down to this 330s. IWM is in a lot of trouble. It's going to probably come back to 164 and may even retest the October low. I expect it will be the first U.S. indice to break that low, ushering in that, yes, this was just a bear market rally and we have much lower lows to go, because if the Russell does break the October low, that opens up the door for 118, and if the Russell goes down there, you pretty much, I think you're foolish to think the SPY is going to hang up here. The SPY will end up down in these areas as well as the Russell falls. So that's kind of the market. Of course, Bitcoin's going to be under pressure. I expect it to go lower. It's just really a battle right now, but I believe the sellers will win this battle. Oil should make one more high, ideally at 96.5, and then you could see a complete collapse in the energy complex for whatever reason. But we'll see. Again, Cal could be wrong. We could be done here. I don't think we are. I think we have one more push higher. Gold's ready to drop at any moment in a complete free fall. Same thing with silver after we get maybe one more high. And then the bond market is starting to get a bid, which I'm expecting as we're in the fifth of a fifth. We should see a bid, a pullback. It's just a tradable bounce. Uh, it's not really a long-term investment hold because this bounce will fail, maybe at 2.7, and then go to much more higher levels. Same thing with the 2-year. The 2-year should be trending higher. It's a different count than the 10-year for whatever reason. But we could still be in a 1, 2, 3, 4, 5, and then we're pulling back in 2, and we could put 1 here, and then rates will fall as we get this sell-off. So we don't know. But right now the count in the 2-year is different than the longer-term bond rate. Dollar index should be. I wouldn't be surprised to see it push a little bit higher, maybe to 106.7, and then a significant pullback and sideways action and another B leg for another long journey higher later. The VIX is also in a dangerous pattern in a left shoulder head, right shoulder. The right shoulder is continuing to build out. I believe this will break out and we'll be at 26, 28, and we possibly could break that and go to 48 to finish the bear market. So we could see moves in the indices of 6-7% in one trading day at those levels. If we have impulsed up in 5, we could pull back on the VIX tomorrow to 15 flat, 14.8, somewhere in that area, and then we can come out of that like a rocket ship. The other option is a 1-2, 1-2, and we come out sooner than we think. Okay, so that's the market really quick. It's just a quick 5-minute rundown of the market. It's a very dangerous time to be long. The market has a failed cycle. It really shows the bears are controlling the market. The market wants to go lower. The conditions are such that it could actually be a catastrophic sell-off. It can even be a technical sell-off without any reason because of the conditions. And that's what will fool a lot of traders looking for news, events to trade. And that will tell you that there may not be. There are flash crashes. We've had them before, and we could have another one. We could be on the verge of another situation in the market. And then, also starting to hear a lot of, worry from the long-term swing trade investment group, that buys the dip, that likes to hold long-term cycles. Their technicals are even showing that the market should go lower. But when I hear a lot of talk on the internet that they're ignoring it, and they're like, well, no, the AI investments is going to help the market go higher. So they're actually ignoring their own signals, and they're using fundamental news to justify to stay long. And I follow some really good technical traders, and I was surprised to see people using fundamental news in the first place, but then kind of hopium. So that tells you, yeah, that we're in kind of the people are biting their nails right now on the long side. So we haven't got the fear wave yet, but it's coming. So there's a lot of still hope in this market. And when technical traders are starting to buy into fundamental narratives of dreams and hope, then the market's in a lot of trouble from a sentiment standpoint. And the VIX tells you all you need to know about the complacency still in the market. So the VIX could go much higher as panic sets in, as a lot of people try to leave through an exit door that's very small, and there's not a lot of room to go. The other thing too, just want to mention is this, what other event could cause this two wave and cause such a collapse, especially at the end of a grand super cycle? Well, it's really hard to say, but what ended the 2000 grand super cycle and the tech bubble? Well, Apple came out and gave an earnings warning. I think in late September. I don't remember the exact date. It was like the 28th or 29th of September, and then the stock took a 50% haircut in one day. Imagine if you own the big seven, one of the big seven, and they just surprise you with some news in the morning that they're going to miss earnings, and then boom, you have a 50% haircut. Oh my gosh, what are you going to do? You just lost half your money. And when it's a big seven, they're not bonds, they're not safe havens. and that will definitely cause a waterfall sell-off. And all it took was Apple and the rest of the complex sold off after that, and it really started the next wave down in that bear market, the capitulation wave. So just keep that in mind, guys. That's the time of year we're coming into, that first week, and it doesn't and it may not even be Apple. It could be any one of these big seven. They come out with a huge mess, and really panic sets in from the fundamental community, the investor class, and then they all, it's like trying to get out. All that big money's trying to leave. So just keep that in mind. And if you go, well, it can't fall 30, 40, 50% in one day, but look how high we're off the lows. So if Google's at trading at 130, right, and it gets, maybe a 30% haircut, it's still way above its October, November highs. So it could easily do that and bounce and come down, right? I mean, and still be above these highs. So don't think for a minute you can't get haircuts like that. Look at Facebook. It's so far off the high, it could take a 50% haircut in one trading session, and before a blink of an eye, and it could be boom down to 208, and then what is it going to do to the underlying indices if one of your favorite beloved stocks loses 50% in one day? That is what happened in the tech bubble. That's what's going to happen here. And when it does, I believe that will start the waterfall sell-off. That news will come out first week of October or very end of September. They really have to notify their shareholders if there's a big deviation from what they reported as soon as they know. So that's where we'll want to see it. That's what happened in 2000. My guess is that's what's going to happen again. And it won't be the government shutdown. It won't be anything else. It will be, that's a surprise that will shock the market when, a company, let's just say like Nvidia or somebody else comes out and goes, yeah, we said we were going to do X, but we actually did Y. Sorry, our bad. Looks like there's a recession and we need to guide lower. All of a sudden, the market will go haywire to the downside like you've never seen before, just like you did in the tech bubble in the final leg. That's what I think will happen, but you guys got to do what's best for you. We're entering, some storm clouds, a hurricane for October, and then once that month passes, the market should be more stable. But the question is, what level will we be trading at in November and December? Are we going to be trading in the 390s and 380s? Are we going to be trading in the 410s? Are we going to be trading in the 320s? Each scenario has a different trading strategy and how you view it, but at least the market will stabilize, I think, in those months. And then what happens in January and February is probably another sharp pullback, depending on what levels we trade. Then we'll look at where we are in either the bull market or bear market. And I believe we're still in the bear market, and I do believe we'll still be down, ultimately down to SPY 325. And to get there, the ideal path for me, and just so you show, this is what I'm thinking, is we come down, we break this 410, we maybe come down to 400, 390 by the end of October. We meander around until January or something, and then we have another massive downturn. Maybe that's when the recession hits finally. Something like this. This is what I'll be looking for. That's what I'd like to see, something like that. And then end in March. So we'll see. And if you really look at it, you can see this left shoulder, a massive head, and then a right shoulder. That would be perfect setup for that. So let's see. We'll just kind of draw that out here, just like that. This is how I think the bear market's going to end. But do what's best for you. And like I said, there's other scenarios where it's the grand super cycle's over. If that's the case, we won't stop here. We'll just go all the way down to here, and then we'll bounce, and that bounce will fail. That's the grand super cycle end. And of course, the bull market end is we'll stop around 410, 414, and then we'll go to new highs into the end of the year. And then we maybe have a pullback again come January, February, but we still respect maybe 414, or we retest that, and then we come out to a new bull market. So a lot of options. Don't know what we'll get. Very interesting time we are in right now. That's all I've got. Talk to you guys later.